John Higgins, Mortgage One. Happy Monday. So last week, not a lot of economic news out. So as expected, the market kind of traded sideways. We're stuck around 4.5% on the 10-year Treasury. That is keeping our mortgage rates on 30-year fixed mortgages, at or above 7%. But this week, we get a lot of information on inflation. We have both the PPI and the CPI. So we'll find out kind of what the Fed is up against with these new readings. We know the number one enemy of lower interest rates is inflation, and the data that's been coming out lately has not been great on the inflation front. So if we get a little bit better news on inflation, we might see our interest rates start to work their way down again. Coming into the year, again, we were well below 4%. And in the last month, we've actually gotten pretty close to 5%. So a total role reversal. And with that, the Fed has kind of taken off the board much of the chatter about any type of rate cuts coming soon. We're looking at maybe September for the first rate cut, might get 2 in this year. That's a big change from where we were, just 4 or 5 months ago, when kind of everything in the bond market was looking on the up, and that's all been dashed with these higher inflation numbers. So we'll get a reading on that this week, and keep our fingers crossed that the Fed's rate increases that they've pushed through over the last couple of years will finally take root and start to maybe pot down some of this inflation that's popped back up. We'll talk to you next week.